In today's show, Bitcoin tanks after oil's colossal collapse, but the bull case remains strong for BTC. Taking a look at this quote, "People say Bitcoin is wild," commented Frank Shapora, a former Nasdaq reporter. "Throughout this coronavirus crisis, we've seen spine-tingling equity volatility. Treasury yields hit record lows. Oil prices fall below zero. Unprecedented Fed printing and bond purchasing. Right now, Bitcoin may be more stable than anything else." And that's a fact. We'll be breaking this down for you in today's show. Also, in today's episode, low adoption puts the Bitcoin price expectations at risk, according to popular crypto analyst Peter Brandt, who just recently tweeted, "I understand the bullish narrative for Bitcoin relative to the fables of the feds and their frivolous fiats. The argument for the moon makes sense. My only question is whether Bitcoin is actually living up to its high expectations. This question does not make me a hater." We'll be breaking down his most latest thread and get deeper into this discussion here in today's show. Also, in today's episode, as you can see, most of the major cryptos are back in the red. Where's the Bitcoin price likely to go from here? Find out all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button and click that bell icon to receive notifications of the latest premium crypto news. And before we kick off today's show, if interested in learning from America's #1 investor, the one and only Teeka Tiwari, the Wall Street legend who picked Apple back in 2003 and Bitcoin in 2016, as he shares his #1 pick for the 2020s, he's calling it the investment of the decade, and the World Economic Forum projects that this will soar 295,000% over the next 7 years. But it's not AI, the Internet of Things, or 5G. For full details, click the link right down below this video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. Let's dive right into today's top story of the day. Bitcoin tanks after oil's colossal collapse, but the bull case remains strong. Bitcoin was in a surprise plunge this Monday, just yesterday, as investors assessed the situation in a worrisome oil market. The benchmark crypto fell by 4.3% to circa 6,748 per token shortly after the U.S. oil futures price slipped into negative territory for the first time. The two assets remain non-correlated, but Bitcoin's growing correspondence to the stock market amid the fast-spreading coronavirus pandemic might have led its price to a decline. The Dow Jones Industrial Average slipped 2.4% on Monday, taking cues from the oil market. The S&P 500 and Nasdaq Composite 2 plunged by 1.8% and 1% respectively, showing that investors continue to seek safety away from risk-on assets. Now, technical advantage for Bitcoin bulls. Here we go. Bitcoin's intraday fall did not stop its price from holding its prevailing uptrend. The crypto plunged right into what appears like its interim support before attempting a minor pullback heading into the Asian session on Tuesday, as you can see right here on the graph on your screen. As shown in the Coinbase one-day chart, Bitcoin tested the upward sloping support trend line off the saffron's ascending channel. The crypto bounced back weekly by 1% to hit an intraday high near 6,925, expressing its likelihood to consolidate further in the current resistance range defined by the $6,800 lows and $7,500 highs. Meanwhile, the price located converging support in the blue 50 daily moving average wave. Bulls attempted to maintain Bitcoin's interim upside bias near these support levels, confirming that they still have a technical advantage against a dwindling macroeconomic outlook. "People say Bitcoin is wild," commented Frank Shapora, a former Nasdaq reporter. "Throughout this coronavirus crisis, we've seen spine-tingling equity volatility. Treasury yields hit record lows. Oil prices fall below zero. Unprecedented Fed printing and bond purchasing. Right now, Bitcoin might be more stable than anything else." Touche. I agree 100%. If I was to put my money into an asset, it would definitely be Bitcoin. Now, what are the downside risks? Bitcoin's growing proximity with the U.S. stocks remain one of the most alarming downside catalysts. The oil shock could send equities further down as the week matures. Meanwhile, investors looking to neutralize their losses could start selling the first profitable thing they see for cash. That is troubling for Bitcoin, which has surged 77% from its cycle low of about $3,700 $6,800. The bull's next objective is to maintain support above $6,800. The floor could lead the prices as up as $9,000 as predicted in one of Bitcoinist's earliest analysis, which I did break down here on the show. Now, before we get to our next story of the day about this low adoption, which puts the Bitcoin price expectations at risk, according to popular crypto analyst Peter Brandt, let's take a look at the overall cryptocurrency market. As you can see, Bitcoin maintaining that $6,800 support, currently down 3.11% for the day. Ethereum is down 5%, trading at $1.70. XRP down 3%, trading at 18 cents. Link is down 5.6%, trading at $3.44. Miss Litecoin down 4%, trading at $40.33. BNB down 6%, trading at $14.89. EOS down 5.9%, trading at $2.50. Satoshi Vision down 6%, trading at $181. And Bitcoin Cash down almost 5%, trading at $219. So as you can see, most all the major cryptos are back in the red. All right, now for our next story of the day. As prices stick around 7,000, Brandt appeared to get cold feet over the still marginal role that Bitcoin has in the corporate realm. Let's break it down for you. Bitcoin may not be living up to expectations. One of its best known supporters from the finance world has warned as prices stagnate. In a Twitter discussion on April 20th, which was yesterday, Peter Brandt pointed to low corporate interaction as an indicator that Bitcoin was not having the revolutionary impact its supporters hoped for. And let's actually take a look at this thread and break it down for you. Here's how it started. I understand the bullish narrative for Bitcoin relative to the fables of the feds and their frivolous fiats. The argument for the moon makes sense. My only question is whether Bitcoin is actually living up to its high expectations. This question does not make me a hater. And then he went on to include, there are a lot of responses in this string dealing with halving, mining costs, and the like. The store value premise, I can accept this. What percentage of global commerce is conducted through cryptos? How many multinational corps have aligned items in financial for Bitcoin? And then let's check out some of the responses. JK responded, Peter, you just can't keep going back and forth on Bitcoin. It's pathetic. Bull run starts December 2020. Responded, Bitcoin bull run starts in December 2020. Be ready. $3,100 bottom with an inverted head and shoulders to confirm the bottom will take place. A bullish uptrend will then begin. Crypto analyst Dave the Wave responded, the problem is the too great an expectation part, aka the moon. What if the price of Bitcoin is not destined to be astronomical? Would the log curve be good enough? Good question. Riggs responded, and growth/progress in the space has jumped magnitudes higher just since 2017 alone. That's a fact. Preston Pish responded, Peter, it's a Trojan horse. The price won't run until the halving occurs. The protocol forces the price to the energy production cost via different adjustment, reward flow, and competition. This is why it's extremely difficult to front run the event. You would need a massive buyer. Peter Brandt suggested that while he understands the idea of Bitcoin being a store of value and can escape from the fiat hegemony, it remains a fringe phenomenon. Brandt was writing as Bitcoin dipped slightly from 7,000 as the U.S. oil markets abruptly fell through zero to hit negative prices, which is wild. First time in my life I've witnessed this. Limited sensitivity to oil meant that Bitcoin averted bigger losses, while proponents argue that the incoming block reward halving will secure its upward trajectory. I'm a firm believer of that. As Cointelegraph reported, it was the Bitcoin Standard author, Saeedeem Animas, who most recently reiterated the idea that a 50% drop in new coins will keep current price levels intact, even if demand also falls 50%. Yeah, and Brandt also stressed, this does not make me a hater. It also reminds me of someone saying, this does not make me a racist. Kind of obvious though, right? But for Brandt, however, it appears that despite the mining shakeup argument, a lack of real-world interaction was cause for concern. A further comment described Bitcoin's technology as so solid. According to one theory, major enterprise, especially finance, switching to Bitcoin voluntarily would be a self-inflicted wound. I disagree 100%. I think we all need to switch to Bitcoin. And as RT host Max Kaiser continues to note on his Kaiser Report current affairs show, banks and broader banking class are the main beneficiaries of government economic policy policy and have been moved to control it in the recent decades. The bigger and more well-connected a company, the easier it is to secure a bailout from the government. Those are facts. Using fresh, unbacked dollars printed at its behest. At the same time, failing smaller companies see their equities and assets transferred back to the banking system. So what are your thoughts surrounding Peter Brandt and his expectations at risk thread? Let me know in the comments right down below. And now let's check out the overall cryptocurrency market cap. We're now back below that $200 billion mark, sitting at $197 billion currently, with the $141 billion in volume in the past 24 hours. And the current BTC dominance is 63.6%. And now taking a look at the top gainers within the top 100, Engine Coin up a whopping 10.6%, trading at 11 cents. Go ENJ, AVE up 5%, trading at 2 cents. Hyperon up 1%, trading at 13 cents. Pax Gold up 0.2%, trading at $1,709. Unised Leo down 0.02%. I believe this is a stable coin, trading at $1.04. And Theta down 0.04%, trading at 8 cents. So as you can see, only a few cryptos are even in the green. That's because most the cryptos are in the red, as we can see right here. We have Digitex Futures leading the pack of losers for the day, down 12%, trading at 4 cents. MadeSafe Coin down 11%, trading at 11 cents. Digibyte down 11%, trading at 0.007. Bytecoin down 11%, trading at 0.0002. Zcash down 10%, trading at $41. Zcoin down 9%, trading at $3.74. And Terra down 9%, trading at just below 20 cents. And now checking out the BitMEX margins. As you can see, the bears are back in control, leading with about 92 million in superiority and growing, with shorts leading 52.19% versus 47.81% longs. Are you currently bullish or bearish on the Bitcoin price? Let me know your thoughts in the comments right down below. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index, currently showing we're rated a 17 in extreme fear. Yesterday a 15, last week a 18, and last month a 13, all of which is within extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign that investors are too worried. That can be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. And now checking out the Bitcoin block reward halving countdown. We have 20 days, 19 hours, 53 minutes, and 15 seconds remaining until the estimated date for the Bitcoin halving, set to be May 12th. So now less than 3 weeks out. How are you feeling leading up to this event? Now we have negative oil prices. The world is in a lot of chaos. But hey, at the end of the day, Bitcoin is still a safe haven asset. It's still a scarce asset. So as they continue printing money in the name of quantitative easing, trillions of dollars being created out of thin air in the name of fiat currency, Bitcoin is doing the opposite. They're cutting their block supply in half, which is coded into the DNA structure of the Bitcoin blockchain. Every 4 years, we have a halving occur. Now, there's also a phenomenon. The phenomenon consists of two different factors: the Bitcoin halving as well as massive demand. We're talking institutional money pouring into the crypto space. And when these two factors come together, we have a parabolic market, which we've seen back in 2012. There was a halving. And in 2013, the market went parabolic. And the same thing occurred after the halving in 2016. We saw Bitcoin run up all the way to 20,000 back in December of 2017. And it's about to happen once again. If you're excited for this event, let me know in the comments right down below. And I want to encourage you to check out the description right below this video by clicking show more in the description right down below for a detailed analysis of what's going on in the market. This goes for all 400 videos right here on the channel. Also has some very helpful resources for you to plug into. This includes the blog to my podcast, which could be found at cryptonewsyes.com, which allows you to download the latest episode of the show in MP3 format so you can listen to it on your way to work or on the go, however you choose. Also, be sure to subscribe on YouTube if you haven't yet already done so. It helps out tremendously. And also, we're on all the major podcasting platforms, including Apple's iTunes, Spotify, Google Play, Stitcher Radio. So whichever podcasting platform you're active on, please help support the show. You can also follow us on Twitter to receive daily crypto news alerts. My Twitter handle is Crypto News Yes, and I also have a private crypto Facebook group with over 17,000 cryptopreneurs like-minded like yourself from all over the world. To become a part of this, simply click this link, request to join. I'll be sure to plug you in. And I also have a private crypto Telegram chat. To become a part of this, simply click this link from a mobile device and you'll automatically be added. And I'm looking forward to connecting with you on the inside. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto revolution. If you gain value out of today's show, be sure to smash that subscribe button and click that bell icon to receive notifications of the latest premium crypto news. And real quick before I go, if interested in learning from America's #1 investor, Teeka Tiwari, the Wall Street legend who picked Apple back in 2003 and Bitcoin in 2016, he shares his #1 pick for the 2020s, calling it the investment of the decade. Right now, there's a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're all betting on a new technology that the World Economic Forum projects will soar 295,000% over the next 7 years, but it's not AI, the Internet of Things, or 5G. To discover what it is and to check out this exclusive presentation from Teeka Tiwari, be sure to click the link right below this video in the description. It'll take you here. Watch the video, enjoy, and I look forward to catching you on tomorrow's episode. Peace.